Hi, and welcome to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson from OTG Capital. And this week, I'm really pleased to welcome to the microphone for the first time Glenn Butcher, and he is from FundWA. Now, Glenn, you and I met at a show earlier in the year. I think it was this year. It's all a bit of a blur, but we're at an investment conference together, ladies and gentlemen. And again, I guess Glenn caught my interest because Glenn's involved in venture capital. Now, this is something that I've been involved in for many, many years prior to me coming to the finance industry, because I used to be in IT and software. And Glenn, I first got involved with venture capital and VC type of companies when I first got hired by a Boston-based software company, and we eventually got bought by Cisco. So this was 98, 99. So it's hard to say this. That's 25 years ago. It's like, oh my God, that feels like ancient history, but it still seems like yesterday. So look, I wanted to bring you on the show because VC is very near and dear to my heart. I think it's hugely misunderstood in this country. And I would like to talk to you today. This is possibly going to go over a couple of shows because I'll probably keep on talking too long and not let you say anything. But no, I will let you speak as well. So, look, for the interests of a pure educational perspective, in your own words, what is venture capital in your eye? If somebody said to you, Glenn, tell me what venture capital is.
So thanks, and really glad to be on the show. So what venture capital is in companies that are currently small but have a chance to be big, right? And it's actually that delta there, that small to potentially be big, that really defines, I think, venture capital. Because most investment schemes are around finding companies that are of some size that have the opportunity to be some, kind of relatively small or bigger than that size.
Hmm.
Whereas VC is absolutely swing for the fences. It's, looking for your Cisco's, actually, those
Yeah.
kind of companies that can grow into, behemoths. And it's also an art. It's the art of actually finding, picking, and supporting those companies, to actually achieve those heights. It's not just investment vehicles, also an activity that you have to do to get them there.
Now, as the CEO of FundWA is actually a venture capital company, isn't it?
Mhm. Yeah, so we're an investment fund, or we're an investment fund manager. We manage a fund. So our investors come into the fund, and we, as the managers, are the people that manage that capital, make allocation of that capital into the startups, and then support the startups. So our role is really the picking, supporting, and exiting of those startups. Using the capital our investors gave us to do so.
Okay, so I guess your initial pitch when you're raising capital will be to investors, hey, we know how to find these gems out there that will turn into 100 or 1,000 time bangers like Cisco's or the CSLs or the Atlassians of the world, and they will place their money with you. And fingers crossed, you do pick a winner or two out there, and Bob's your uncle, and we all take the money at the end of the day. So
That's
again,
right.
I was always curious because in this country, I always saw venture capital being really the remit of the eastern states. And so please excuse me when I say, it's really interesting that, somebody from WA is doing this. And again, I have experience. I've been a sand groper. I lived in WA when I was in the armed forces in 1979, 80, 81. That's right. Just before I came back over east to become an officer. But I was over there at Swanbourne Barracks and enjoyed an incredible lifestyle. So I guess you're very lucky over in WA. It's a unique location. Your proximity to Asia, I think, provides some WA some interesting opportunities, which we'll go into a bit later on in the show. So I guess my very first curly question to you then is that, why is venture capital so hard in Australia? So much harder, for example, compared to, the likes of the United States or Israel, for example, where raising VC there appears to be so much easier.
Well, it is easier over there, and my theory is that it's because we're the lucky country, and we generally are a lucky country. I know, I know some people say past, but I actually genuinely believe we are the lucky country. We are, we're a successful place. We're a high income country, relatively speaking. I think I saw a statistic recently that said if Western Australia was its own country, on a capita basis, it'd be the eighth richest in the world.
Wow.
So it's Yeah, exactly right. So um, we don't really, but fundamentally, there's a lot of opportunity in Australia to make money, right? There's a lot of opportunity to get a high-paying job. You can go work in Australia, go work in a mining company, But in any case, kind of as a country as a whole, we have more opportunities, I think, than most countries, to make a success of yourself. So I think that means that we're complacent. We don't
Oh,
have that same kind of drive, right?
oh, okay.
That same kind of need or maybe the same kind of hunger, you know. And so some subset of entrepreneurs that would have otherwise been entrepreneurs end up working for a corporate, making good money and having a comfortable life. But they don't have that kind of like, I need to be successful. Um, so I think in some ways we're the victim of our own success there as a country. And so we don't have that history then of actually having these people that have to lift themselves out of the circumstance they're in to get where they need to get to. Like Israel's a good example there of an entire country having to do that, from scratch,
Mm.
and they knew they needed to, so they did. Like they didn't have any choice, you know. So I think that as a result, we have a culture here that is fantastic around innovation and invention. There's a whole laundry list of things that Australia has invented. I think Australia tends to claim Wi-Fi as its invention, actually. I think from work that was done at Sara at some point. So we have all these world-class scientists and engineers. What we're typically poor at as a country is actually then kind of commercializing those ideas. Not to say there aren't great companies out there, not to say there aren't success people out there, not to say there aren't great entrepreneurs out there. But we just probably have a bit of a less of a culture of trying to do that than other countries. And so I think kind of looking at that holistic viewpoint there around Australian society, I think that means that we haven't had a history there of actually having these giant winners backing people that have got these wild ass ideas about how they're going to change the world. We just don't have as much of a history of that as some of these other countries do.
I-
Um,
Yeah, again, it's psyche, though. I'd proffer as well. I agree. Maybe we are a bit too lucky, and we need to have these accelerators that are out there making uh, people out there quite wealthy. I mean, one of the Atlassian guys actually lives in my area, and when you see him driving around with his $500,000 electric Porsche, I look
yeah,
at that and go, "Wow, that's a fraction of the 8 or 9 billion that he's actually worth." But
yeah,
that's notwithstanding, I still have been exposed to many, many people that have gone into this sphere at various parts of the supply chain of venture capital. And I want to talk to you for our listeners about all the different phases when we're talking about venture capital, because, going out there and striking it rich with, let's say, for example, a software company is really the tip of the iceberg. There's so much below that surface that and what I'd like to do, first of all, is talk about the investment community. So, you and I met at an investment conference. My focus, for example, is around I do bonds, but they're property bonds. So they're bonds secured by property. And we have this love affair in this country with property. I don't really see, when you look at an agenda of an investment conference, a whole range of companies going out there and saying, "Hey, we've got the next big widget. We've got the next big Nvidia, for example, that place $100 with me today, and you're going to be rolling in millions in a year or 2 years' time." That's not really the conversation I see at investment conferences. Do you see that as a challenge when you're the CEO of FundWA?
absolutely. One of the big reasons that we end up saying no is, to be honest, lack of ambition. People that want to build a decent sized company that works well for them. It's a great lifestyle company that's going to keep them, kind of by most normal standards, kind of wealthy.
Hmm.
But that's kind of not really what VC is about. VC is about swinging for the fences. I'm looking for as a VC CEO. I look for people that have, they think of a $50 million company and think, oh, that's a great start. Like I want people, you know. And for most people, like if you're the owner or even a part owner of a $50 million company, you're doing pretty damn well. But what we want to look for in the venture capital community is people that want a $5 billion company. They want to be the next Nvidia.
Yeah,
Um,
yeah.
you're in a fraction of Nvidia, but they've still got like big ambitions. And I think it goes back to that complacency partly. I also think though it's a lack of awareness of that can be done. Like there's not a whole lot of those kind of heroes that are lauded. The Atlassian boys, Scott and Mike, who I know quite well because I used to work at Atlassian, reported directly to Scott. They had that big ambition, kind of really early. And that was a big driver for them not to stop and to, when they found roadblocks to keep going and to find ways around those roadblocks and just keep building a bigger company. So I think that your average investor at an investor event doesn't hear anything about these ideas because they just don't, they're not the right kind of people probably even to hear it, actually, I'd say either. But I think largely it's just driven back a lack of history of those success stories in Australia. And I think the success stories of people like Canva and Atlassian are really starting to help change that viewpoint. We're really starting to see like actually you can actually be successful in Australia. CSL is another good example here, different field. And I think as those stories start to go around and people hear the stories of, how much a seed stage investor in Canva made, for example, and they kind of go, okay, this is actually interesting. I'm actually interested in making 400 times my money, and so when those stories start to spread, I think that's going to change the investor viewpoint.
Okay, so I guess it's appetite that we're really talking about then. Do you still see, for example, in today's Australian investment landscape, an appetite to participate in venture capital?
I do see investors develop an appetite to participate. When they understand the sector, they understand the asset class, they understand the risks and the benefits. They can consider allocating some of their assets, to into this asset class. Australia is underinvested, in this asset class as a whole,
Hmm.
for individual investors, and compared to a place like the US. But I see that as changing. I've had some early successes and early funds in Australia in the last decade that are starting to show some really good outcomes. People are starting to get excited about that. So I think that's changing, right? And I think the next decade is going to be very interesting in that space. I think Australia is going to have a lot more maturity around this asset class than it has previously had. So to me, it's a very exciting period coming up.
Well, I got to say, as somebody that participated in it 25 years ago, now that I say that out loud, it makes me wince a little bit.
What is
All the
that,
more
Trevor?
for it because I just think this is an area where when people are looking for, a big win, a little bit of judicious investing here, and we're not talking necessarily about huge amounts of money, depending on, and we'll talk a little bit further in the show about the phases of when you're securing uh, venture capital investments. But look, we're just about at time right now for a short break here on Dollars and Making Sense, a weekly show about finance, money, and investing. I'm here with Glenn Butcher from FundWA. We're going to take a short break and be back with you in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson, and with me today at the microphone is Glenn Butcher from FundWA, and we are talking all things venture capital. Now, Glenn, before we went to the break, we were talking a little bit about Australia's appetite for venture capital, and I guess both you and I are seasoned and wizened and a little bit battered around by our age and years of experience, but there is a little bit of a light at the end of the tunnel, and thankfully it isn't the freight train coming, back the other way to run us over. I guess, look, from my own experience, when we were chasing VC money in the late 90s, I guess my own experience in the 90s and also the mid 2000s, when I actually went out into my own startup, it's a very different world. And I guess my own background is with a US startup, and we got bought. So, it's one of those fairy tale stories. My mum, I got to tell you, ladies and gents, and Glenn, it's a funny story. My mum and dad come from very strong working class migrant background, and so my dad was a farmer, and I was trying to explain to him, that the CD that I was holding at the time, I was going to Japan and selling it to Japan Telecom for $25 million. He couldn't quite grasp it. And so when our company listed on NASDAQ and we did very, very well, and I had stock options, it's really hard to explain to somebody that was from World War II era that all of a sudden my wife and I, relatively speaking, contextually became reasonably wealthy overnight. And I guess if you're willing to risk, and venture capital really is about risk, isn't it, Glenn?
It is about risk, but it's not necessarily about taking just a risk for the sake of taking risk, right? It's a managed risk. For example, I talked to investors who have invested in the technology space, and they said, "Oh,
Mhm.
I did that and I lost my money." And I said, "Well, who did you invest in?" They said, "Oh, I invested in this one company." Which is from any sensible investment point of view is a risk, let me say. And like every VC fund invests across a spread of companies because you've got to manage your risk. So it is at the inherently riskier end of the kind of investment portfolios of people. And that's absolutely true. But I would say it's as much volatility as it is risk. You don't really know what you're going to get. You might get an okay outcome, you might get a great outcome, you might get a very bad outcome. You don't really know what the outcome's going to be yet.
Well, I guess my own experience, as I said, from 99 to about 2001, I worked for a software company. We got acquired by Cisco, which at the time was one of the biggest networking companies, probably still is today, but it's still,
Liz?
I guess, dwarfed by the likes of, companies like Microsoft, Apple, and recently Nvidia. But it was a big thing for us. We were doing, I think, 50 million run rate at the time. We got purchased for $2.5 billion. It was heady times, and our stock was worth quite a bit. So I had that experience, but then I came and worked for a local software company out of Chatswood in the telephony space. And we went out and I was pumped. I was there and we were a startup and we were going to go out and find venture capital money because I had been to Silicon Valley. I had really tasted and I had the bug, Glenn. I got to tell you, I had the bug. I wanted to go out there, it's one of those interesting things when you get that bug, and I'm sure you've met startups and founders that just are so infectious with their enthusiasm and passion. And I was one of those guys. But then when we started to try and raise money, oh my God, what an experience. I'm curious because at that time, and we're talking, this is 2004, 2005 or thereabouts, so about 20 years ago, we didn't see the V in venture capital really being venture. It was just, what I saw was, hey guys, we'll happily lend you money, but we want your houses as collateral. Is that still the case today, Glenn?
No, thankfully that's really changed. I see a lot more venture and venture capital, like people actually willing to take a risk on a company, and a team. Um, um, we're a lot than we were 20 years ago. There's a lot more funds here. There's a lot more venture capital people. There's a lot more startup founders who've been successful and come out the other side and have
Hmm.
some knowledge of that journey forward. So I think it's a really important part of the ecosystem. So yeah, it's really not like that. Look, at raising venture capital money in Australia is still harder than the US. It's still a less but it is available. You can get it. What I'd say though, people probably don't realize about that is actually just how much venture capitalists say no. Like if you go to a venture capitalist with a great idea, expect them to say no 99 times out of 100. Right? That's the art of venture capitalism. I'm saying no, 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 no. Oh wait, I mean actually meant yes, kind of repeatedly, right? So get used to being rejected still these days. But if you persevere and you got the right idea and you keep executing, you can get it.
Yeah, it's a fascinating thing that when we talk about this process, and so we're going to talk a little bit about some of the different entities that we're talking about. Just to round off that story about when we went out, we actually did end up securing a little bit of finance. It ended up being our CEO's mum that came through and provided some much needed venture capital, and we got successful. We actually got purchased by a company called Broadsoft
Mhm.
out of Maryland, and Broadsoft eventually got purchased by Cisco. And
Mhm.
so a wonderful story because we were tiny. We were an 8-person company, and at the time, we got sold for about $2.5 million. Made absolutely no news whatsoever locally. But what's fascinating is, and again, you may or may not know, one of my colleagues at that time, a nice guy called Wendell Kuhneman, ended up at Atlassian and did
I know
very,
Wendell.
very well.
Yes.
And
Yeah.
so, Wendell was from the company I was part of, Carbon 12. And, it's one of those rare successes that I can look back on. I can't say I made a huge amount of money, but we walked away with our skins. But I think the whip in the tail that I wanted to let you know was that the four of us that had skin in the game, we still had to put our houses on the line
Mm.
after the deal was done to cover the warranty for the software. Now, my wife was looking at me at the time going, "Are you kidding me?" It's like, they've bought the company. Why do we still have to put our house up? And that was to cover the warranty. And so we all sat there for 18 months hoping and praying that the software didn't glitch or, they discovered anything wrong with it. But they were a nervous 18 months. But, it's all part of the trip and the exercise. And so I guess, it's really pleasing to hear that that scenario has changed a lot. So, if somebody comes and I guess let's talk a little bit about pitching because, I often like the discussion around pitching because it's very much like when people go and pitch a movie in Hollywood. And I remember one of the shortest pitches ever was the pitch for Twins, the movie with Arnold Schwarzenegger and Danny DeVito. The pitch was that Twins, Schwarzenegger and DeVito, and the studio executive signed on the dotted line and gave them the money. Now,
Yeah.
it's never that easy. So let's talk a little bit
Ah.
about pitching. You said that VCs say no a lot. How much time in a week or let's say a month would you spend as the CEO of WA Fund listening to pitches?
I see pictures every day.
Every
So
day.
literally every day. So, a lot. I shudder to think how many companies I've seen. Thousands, I guess. It's a
Wow.
huge number, right? Um, it's funny you said there around that, right? So, one of the things that VCs look for, it's really important to VCs is team, right? And you know
Absolutely.
what? That's so similar. I would have gone, yeah, that's going to work. Those pair, I don't even know what it is yet, but those pair will make whatever it is, they'll make it work.
Yeah.
And
And they went
I've
ahead.
done that. I've
Yeah.
seen a pitch where the first slide was a picture of the team, right? And I looked at their credentials and what they've achieved, and I went, I'm in because it was an absolutely like amazing team. They had like done incredible like results in multiple times in their previous lives, and I mean this is all internal. I kept my poker face going, um, but internally I went, yeah, I don't even know what they do yet, but it doesn't matter. Yeah, these guys will make it work.
Yeah,
And
it's a fascinating thing, I guess, Glenn. And if you think about, and I term that as track record. Okay,
mm,
so I look that as a bullet point. Do they have track record? And so when you look at the guys at Atlassian and the team, Wendell is a great example. And I don't mind patting him on the back because he was really a very, very good CTO when I worked with him 20 odd years ago. And so it doesn't surprise me that he's gone on to be successful. And so I guess when you look at even an ASX listed company, we talk about it at the Australian Shareholders Association when monitors are talking about, the credentials of a listed company. The first thing they will look at is who's running it.
mm, mm.
Okay. And this, I think, backs up what you're saying. If somebody's coming in and pitching to you saying, hey, we want X millions of dollars to do a startup, it can't be Joe Schmuck. It needs to be somebody that really does know what they're doing.
One thing that I'd say that's a bit different about this space is that failure is a positive, not a negative. I
Wow.
I would rather see a founder who's tried and failed than a founder who hasn't tried. Right? Because I guarantee the founder who's tried and failed knows more than the person who hasn't tried. Right?
Yeah.
It's still experience, right? And that experience still counts. Now, of course, I prefer to see someone who's been successful, but ultimately I'm looking for, what have they got in their tank, right? And if they have tried, failed, and still have the gas to keep going, and they're like, I'm not done yet. I'm going to make this work, then good on them. And I think those people are actually, kind of have a valuable set of experiences they learned out of that as well.
Yeah, it's a fascinating thing. I guess when you look at, and the fact that you have so many pitches, wow, every day that pitching, people are pitching to you. I guess what's the thing that strikes you the most as being maybe a factor that really, you would put right across the board of all the pitches that you see that are Australian-based companies asking you for money? What's the endearing or say the prominent factor that you're seeing? Is it track record or is it, are they bold as brass? What kind of thing, what kind of characteristic are you seeing in these startups when they knock on your door?
Mm. So there's lots of factors, but the three most important factors I think in the success of any startup. First one is actually market timing. You might have a great idea with a great product, and you're too early or you're too late.
Okay.
And if you're too early, nobody's buying it yet. You got to convince people they even want this thing in the first place, and you've got a very long journey and very hard journey ahead of you. So, but too late means the moment's passed. There's too many competitors. It's a mature market. Um, Now you might have a superior product, and so you kind of like create that cycle anew. Zoom is actually a good example of that. That was kind of a mature market, but all the products were terrible, right? And they just come back with a superior product, a modern product, right? And so they kind of like, created the new thing. Yet it also happened at the right time. It was a kind of period
COVID.
of COVID, right? And so like they came with a superior product at the right time in the market, and that's what caused their success. So that market timing is really important. So I got to look at that when someone's talking to me and say, well, why now? Why is this now?
Hmm.
And the second factor is team. Like, who's the people? What's their track record? Do they have passion for this? Is this a job? Is this going to be something that they really, really want to be successful at? Are they able to attract other talented people around them?
Yeah,
These are
that's a
all like
big part of
really
it.
important factors. Can they lead an organization if they're in charge? Um, um, and the third factor is actually the product. So the product's actually not the first factor; it's actually the third factor.
Yeah, the
Because
mousetrap, yeah, is not
yeah,
always the thing, is it?
exactly. Yeah, right market with the right team. Look, honestly, their first product is probably not what they're going to take to market anyway. They'll almost certainly pivot. They'll almost certainly go into something else. So almost in many cases, it's like I'm going to back those people to be the people to invent the right product, not necessarily what they've got today.
Okay, well, look, Glenn, we're just about out of time here today. Look, I said we were probably going to spill into two shows, and I think we absolutely will. So, look, ladies and gentlemen, thank you, Glenn, for being part of our first show on venture capital, because we're going to spill over into part two next week. So, Glenn, thanks so kindly for being on Dollars and Making Sense.
Thank you very much for having me.